Don't know why the shortcut wasn't working. Cool, cool. Not going to be on too long tonight, guys. I'm absolutely shattered. Just going to go through a few trades that I took this week on indices. Let me just turn this down a sec. Just turn it off. It's annoying me. Yeah. So Nas, SPX, and US30 as usual. The main ones I trade now. Don't really trade any of the others as much. Been trading GU and EU during London, but I haven't had enough time to trade them this week really. So start off on NAS. Always start from the higher time frame. Yeah, I mean we've been pretty bullish since this low. On Friday we took out some supply up here. We distributed, came back and accumulated and made a new high. Just trying to think when I took the buy. I think it was yesterday. Oh yeah, it was yesterday. Yeah, I missed. So as you can see, like, you know, this area, we had like some imbalance. We had some imbalance here, and if we go on to the 1 hour, we had a little bit here, which was filled. You can see this. Oh, I hate that color. One sec. You can see we filled it on the Friday. Don't think this gave an entry. I'm not sure. I mean, you could have probably took this, to be fair. Don't know if I did. I think I might have done. I'll have to have a look. We swept the lows here. You can see like Asia range, Frankfurt sweep, bullish intention. This area here gave a nice sell on Russell, which I do trade, but all the others just manipulated. There was a sell that come in here, I'll show you in a minute. But yeah, you can see London gets swept by equities open as usual. But you can see this distribution. I mean, it was just the cause of this liquidity sweep, and then we immediately break. So you're just looking for like something on the 5 minute. Once we break, you can see the RSI is really sold off here on the 15. On the 15, 5 minute as well. So once price gives you that sweep, we immediately give a bullish candle back into the range. Leaves like this imbalance. It's probably easier if you're like on the 3 minute or 1 minute here, but 5 minute will do. Straight back into the imbalance. So if you were to take something, you know, stop loss just below the low, targeting something like this. I mean, it depends what you want. You could just aim for like a 1 to 2 if you wanted. If you want to go for more, you know, partial at like a 1 to 2, partial more up here, depends. But obviously, yeah, the sweep, we come in and then off we go. So you would have hit your first target, which should have been this high. You know, if you wanted to, you could have closed out from there. And then again, you know, more imbalance here. Do we come back? Yeah, we do. Let me just put that on 1. So 2 entries that you could have got there on Friday. Just fast forward. because I didn't actually get in any of these. Oh, sorry, hold on, this is really annoying. So where did I get in? So next day, Frankfurt. This was Monday. What did Monday do? So we get our. So what have we got here? You can see this high where everyone is obviously trying to sell from because it made a new low. But you know, in reality, all it really did was just reaccumulate. They tried to distribute. Um, you know, not really looking for buys here really. I mean, you can see it does come back into Asia. Um, you do get this accumulation again during pretty much exactly the same time as this one, 4 o'clock, sort of 4 o'clock time. Price comes into here and then fails to go higher, but does come back down, fills this imbalance again, and then if you were to take an entry, you know, you'd just be down here and then targeting this high, something like that. Or if you did just want to follow the order flow, it's a bit ballsy trying to buy up here, but you know, you could have got in somewhere like during, you know, into here, pretty much just makes a new high, manipulates this low here, boom, comes back, mitigates, and then goes. So, but my entry was, so I got Asia, swept the lows, so you can see we distributed during London, distribution here, don't know if it gave anything. So, you know, there's definitely going to be sellers when price comes back into this. But, you know, once we've swept the low, once we've swept this low, like, you know, I need to see a distribution up here if I'm going to sell it. So what do we do here? So there's your sell if you wanted to take it. You know, just taps it nicely. You can see price tries to distribute on like the, you can see some kind of like shift here. We come up, price taps that imbalance perfectly, makes a low and then comes back, mitigates this imbalance. So this would be like the micro distribution that I'd want to see. So you could have took it here, or you could have took it out of the imbalance. Something like, you know, you can put your stop loss in the imbalance. Probably just do something like this. Not the greatest risk to reward, to be fair. I wouldn't have taken it, but you know, if you were to take this one, you know, this price has tapped the imbalance. You know, we're at highs, so you've got these highs here. They mitigate. You know, this distribution. If you were to do something like this, you know, target this low, all of a sudden it's like a 1 to 3, so it's worth it. It's worth it. It's all about whether it's worth the risk to reward. I won't go for anything. I will take 1 to 2s. Like I took one this morning, a quick 1 to 2. So yeah, this is. So I think I can't remember what I was waiting for here. Let me just see. Oh yeah, that was it. This was it. This was the trade. But I was on the 1 minute. So again, sweeps these lows here. You know, failed distribution here. We've got an accumulation here. Obviously, reaccumulation here. Here's your accumulation. Fills this imbalance. And then, yeah, again, sweep of like lows. Timing was perfect. Obviously, equity's open. you can see like once we sweep, we immediately start, filling in balance, things like this, and then we get another sweep here. Price makes equal highs, pretty much comes back, fills the imbalance, and it's like bang on the right time. You couldn't have asked for a better time. It's equities open 2:30, half 9 for the Americans. So as soon as I see like one candle sort of push up like this, I'm I'm going I'm going break even once it leaves the range. Um, but not just yet. I'll wait. Um, Sometimes I'll go break even, but sometimes I won't, because like on the open, you sometimes do get another candle like push in. I always keep my stop loss a little bit lower as well. Um, you could, if you wanted to, you could keep it to this low, but I was just kind of being a bit risky here. Um, and yeah, yeah, there you go. Yeah, it does manipulate again, and then that's it. So 1 minute after the open, big push down, and then off we go. You can see on the 15-second, like this candle pushing down. Um, yeah, and there we go. So take partials at this high. Take 25% off. I think I took for a 1 to 5. I took a little bit more off here at a 1 to 8, and then I think I left 50% on. This is a time where, like, if you are scalping, you could look for like distribution here, but just be careful because of how bullish it is. Um, Sometimes it's better off just waiting for. Hold on. Yeah, sometimes it's better off, like, if you are going to take a distribution here, it's better off just waiting for like this, and then something like that, because we are bullish, we're right at the open, and if you go on the higher time frame, like, where can we go? I mean, yeah, we targeting these highs, which we do eventually take. So that would be my long-term sort of target for this trade. Um, so I took most of my trade off here at 1 to 33 yesterday, when, yeah, I think it came in at, yeah, and that's where I took literally most of my profits off. Um, I was still going to hold a tiny bit. I think I've got like one lot left on it. Because on the daily, I mean, looking at the daily, you can see like we swept these lows. Prices break this. We've got a break structure. Comes back, mitigates this imbalance. We could quite easily make a high. I don't want it to, but I just got to follow price action. I'd quite like to see what happens when we get into this area. This imbalance here, because it could shoot us down. We'll just have to see what the news does. There's loads of news this week, so probably not going to be trading until Friday. I might do a bit tomorrow, but yeah, that was pretty much that trade. I took another short this morning. I was on a call with Cam and Connor as well, I think. Yeah, Asia. So this is the kind of like distribution I'd want to sell from, because like, why? Well, you know, like for example, it's exactly the same thing. You study this distribution here. Yes, we're bullish, but it's after taking a high like this one. So it's taking liquidity. I think it's left equal highs here. Yeah, but looking at it, I took a sell on this. I think I took it here though. was out of this balance. I didn't get in this one. I wish I did, because the risk to reward would have been insane. Yeah, I took a sell out of here with my stop loss just above this high, and then I targeted these lows here, and then next partials here and closed out for a 1 to 10. But like, you know, if you look at this one is so easy. Like I say, you've got your sweep, which is here. You know, takes this high out. We've got Asia range building. We get London open, which takes out Asia, and then we immediately sweep to the downside, give a minor BOS here, and I mean, even if you just took like this imbalance here, something like that, and if you held it, you know, if you took this first mitigation here, this is what I mean by not going break even too soon, because like some people might have gone break even when you've got these like couple of candles pushed down, but quite often they do come back and take people out that have gone break even, and then they go. So I mean, that risk to reward there would have just targeting that low would have been your 1 to 2 for the day. This one here, but yeah, targeting here again, targeting like this low here, to come back and fill this imbalance, and then you know, kind of same thing. Look, we've got a, let me just delete that. We've got another sweep above the highs. So like, yeah, it's counter trend, but if the risk to reward is there, I'll take it. This one's just like more of a continuation play. I'm just going to once. Haven't back tested this properly yet. I need to journal it. I'd recommend journaling as well if you guys don't do it. But yeah, just London Open, push up, lower low, and then 50% I think I took, and then wherever it, yeah, so when we start pushing back into the range, like here, and then there, target at the low, and that was it for 1 to 2. I just put like 0.3 on, 0.3%, so I just made like 0.6%. It's not too bad. It's more than I make in a day's work. But then I ended up losing the trade today as well, which I'll go over it in a second. Where were we? Oh yeah, shit, I've gone too far. So I was going to sell this. So we had, where was we? Yeah. So this was this was New York. We tried to sort of distribute here. Didn't really show much signs of weakness. Like we couldn't even break this. We did leave equal lows. But I was gonna sell this, but I didn't. That would have been, you know, just here. If you were to take something like that, stop loss, just target these lows. You know, 1 to 2, pay yourself, and then you know it comes out, hits you at break even. But then we get so we get this massive U tag come in. You can see like price is trying to do something here. You've got like sellers here, and then this massive UTAD that takes out Asia, you know, gives you a minor BOS. So I tried selling it when it came back, out of this imbalance here. Tried selling this, stop loss just above the high. First target would be this low, and then second target coming back down just to sort of fill some of this imbalance here for like a 1 to 5. Um, but she wasn't having me. I mean, we are massively bullish, so it's quite risky. Um, but we do sort of give like some kind of reactions, but ultimately yeah, we just go straight through it. So didn't really, yeah, it is what it is. I mean, it's just sort of pissing about here at the minute. Liquidity's died off. But long term, yeah, I'd like to see. I'm just going to put an alert here. Yeah, long term, would quite like to see what we do when we come up into this daily IPA up here. So let me just take this off. I use this because sometimes like I don't like this indicator is pretty good to be fair. It just marks up the imbalances so I don't have to do it. But I know they're there, but just sometimes I just miss them. Like so if I'm on the daily, I can just mark it up, and then like if I then go down to like the 4 hour, like I know it's there. I know what's there. So um, we'll see what we do when we get up there. Um, Obviously US 30 is just like massively bullish at the minute. We've got some up here. We did have some here today. What we just went straight through, but ultimately, just looking at the daily, like nothing about this really tells me, sells right now. Um, with this to me just looks like we're accumulated, and we're gonna, take these highs out, and then where we go from there, I just, you know, more than likely we'll just end up making a new high, but I'll just trade what I see. If I see anything, when price does come up into here, I've got an alert. I've got an alert just in this last area. Um, we do have some imbalance on the 4 hour that we could come into. Um, yeah, my alert's on there. So it's just a waiting game. I mean, perhaps we can come down tomorrow, fill some of this. Got an alert here. So perhaps we can come down, give us, some bearish price action tomorrow during London. Might catch a sell, something like this again, quick sell, and then London gets taken out, New York, and then boom, something like that. If I get anything like that, I'll be straight on this shit tomorrow, no doubt about it. Um, SBX, same as Nas really. This one I freaking love trading, man. Like this Russell, um, it's like 2,000 small cap companies. But honestly, like I don't know if you go to like Friday. Ah, here we go. So last Friday. So just take these off. Yeah. So we've just kind of got like this kind of bullish trend going on. We've got New York news. So, like, what are you gonna do? You've got, manipulation candle here needs mitigating. Straight into the 80%. Boom, low, done. That's all you need to do. You can even do the 50, or 50 would have been 1 to 4, but if you did the 80, that's like a 1 to 10 within like, you know, 8 minutes. But you go to Nas. Let me just get another chart up. Or US 30, same. Where is it? Friday the 25th. Here. So same candle, same time. Obviously, yeah. I mean, you do get the mitigation here. So if you were to target the low, here, and entry, stop loss, that's like a 1 to 2, but it immediately just goes up and manipulates and then goes lower with no mitigation. I mean, you could have tried like a sell here, but I think they just go higher, to be honest. I think they do. Yeah, yeah, they do. SBX does exactly the same. Where is it? Friday, you can see same thing. Tries to come back. Like this would have been the entry. You would have took your entry somewhere here, or I probably wouldn't have taken this one. I would have took this, and then if price, comes up, is what it is. Either you just let it hit stop loss, or you just come out the trade and just walk away. But anyway, like getting to my point, like this baby here seems to just work a lot. You know, this one Tuesday, yesterday, you've got imbalance, manipulation candle during London, sweeps these, you know, displacement to the lower side, we come back, mitigate, target the low, so partials here, um, maybe more partials here, especially like once you take, you know, something like this out during the open, because this is the open candle, once that happens, they go, so always pay yourself as soon as you can, but, this, see what I mean, this candle, exactly the same time and everything, but it mitigates perfectly, then goes lower. Um, it just seems to work a lot. Again, manipulation of the highs, bullish candle during London, make a low, we come back, mitigate, take 50% or 80. It would have missed you if you took the 80, but gone for the 50 there. First target would have been like a 1 to 2, pay yourself at like 1 to 2, or target these lows. 1 to 3 during London. That's it. You're done for the day. Um, this one here for the lows. Prices accumulated during power hour in an area here. You've got this candle. So you can see like there's bullish intention here. Perhaps you could have got in here. Not really my trading time, but as soon as equities open comes, you get 1, 2, 3 manipulation candle, 3 bullish candles on the 5 minute, come back, mitigate, boom, just entries everywhere. Even if you wanted the sell, you might have got taken out here, but you can see Asia coming in, boom, London breaks lower, um, comes back. So you could have put your entry here, and this is what I say about always adding a few pips to your stop loss. I always add like on indices it's like 20 points, but on forex it's like 2-3 pips I always add plus spread. But yeah, you might have got taken out of this one if you did add a little bit. Targeted like these Asian lows, that's a 1 to 3, and then you get the buy. So I don't really trade forex as much because I don't need to, because every single day these just give entries. Manipulation of the highs. You've got this first drive here. Mitigates, goes lower here, but then we break up. We now then break this, come back. So again, stop loss, entry somewhere here, boom, lower, and then we break again, come back, mitigate, and then go lower again. So yeah, there's just so many entries on these. It's just I pretty much just stay away from forex. Like today, sorry, not today, Friday the 18th, something like this. You get, so we're in a bearish sort of order flow here. Look to the left. Is there anything here? got like a low there. Comes into some demand to the left. Bullish divergence on the RSI. You know, all the goods, all the little sort of things that you look for. You could have potentially took some kind of entry here, but you know, with the open, you might want to just hold off. But yeah, if you were to take an entry here, you probably would have wanted to wait for like some kind of break, and then wait for price to do something like this and then go. But if you did do that and you took a loss, is what it is. Just now mark out the next one. So this is the, you know, sort of manipulation during the open. So look for some kind of imbalance. You could target this one, but think of it like in a sort of trading range perspective. If you were to take this with your stop loss to the low, you know, risk to reward isn't very good. But if you take this imbalance here, or like 50% of this manipulation candle, all of a sudden you've now got like a 1 to 4. I have been playing with doing things like this. If I see an imbalance and price is really pushing up like this, sometimes it just doesn't come back. So you can fiddle about with your stop loss, maybe put it below this wick here, target the highs for a bit of a better risk to reward. But yeah, I don't think this comes back. Yeah, no, it's gone. It's gone. Yeah. So it is what it is. If you miss the trade, just move on. Like, wait for the next day. Don't try and rush in and, you know, hold on. Some questions here. Sorry, I don't know what you're referring to, Cameron. I'm terrible at reading comments. I do apologise. Yeah, like this one here, for example. We have got some bullish order flow coming in. Price is respecting nicely. On the 15-minute, we've got some imbalance just here. So just wait for a classic setup. You can see like some orders are being filled. Break. So just measure the high to the low like this. Look for some areas. There's a tiny bit of imbalance here on the 5-minute. This one is already filled. This one's been filled here. What else have we got? Yeah, so anywhere kind of in this vicinity on the 15-minute. Or you could just mark from here to here. There you go. Comes back. I mean, 50% would have probably been missed. But you get like a double tap on this imbalance here. You fill it once and then you come back just on the open, bang on the open, you get this bullish candle. When price stalls, you can just press sell. That's what I would do. Or you could have your limit. You could have your limit off the 80 up here, targeting this low, or this one down here. You know, 10 to 1. You could have waited for that. Obviously, it doesn't come in, but if you did have your 50, as I say, you can add a little bit to your entries. I add them to my stop loss. I don't really add them to my entries, but you can. That's it. I mean, you could have even put it to this imbalance here, but it's already been filled. So even that is a 1 to 3, 1 to 2.6. So there's entries everywhere, guys. Everywhere. Every single day. It's just training your eyes to see these types of entries. A lot of them are continuations. If I go on to, let's try and find, there's one here, decent one here. Like, the risk to reward just to this low, taking this, is insane. If you know, you're at a high, you've got your range being built up here, and then you can see this distribution being made. Once you see some imbalance, take it. You know, you've got this candle here, you've got some imbalance here. This gives a mitigation of this. We break lower, and then we come all the way back, fill this imbalance, and then we go. That's it. That is the trade. Again, like, you know, taking something like this, just taking like the open of that imbalance, you can put your stop loss to this high or just above, just to be safe. Targeting Asian lows is a 1 to 4. If you did put it just above here, that's a 1 to 6. Like, logically, you know, this is the only area they'd want to come into, really. I mean, obviously you have got this whole imbalance, so whether you wanted to do it from the start of the imbalance, doesn't matter. Whatever you're happy with, really. Again, this one, same shit, trading range, bullish candle, we come back, we break, we leave some imbalance, and then, oh, we fill it during New York again, literally, exactly on the imbalance there, and then boom, off we go again. Um, is it my mic, Cameron, or is it yours, bro? Can anyone hear me? If you can't hear me, just put a 1 in the chat, because I need a new mic as well.
Yeah, you fine, mate.
Oh, cool. It's his mic. It's his mic.
Does this actually work on forex pairs as well, mate, or is it all just like indices and things?
I mean, definitely, 100% works on forex pairs.
Is it certain times? Sorry, I've only just joined, so I've missed the first half hour. Is it certain times of the day you're looking at as well, or
Yeah, it's either London or New York. Um,
what, the open?
yeah, I mean, if you took the name off, you know, there's no difference. I mean, look, the Open. What happened? Got 3 lows. London sweeps, pushes up, mitigates here, makes a new high. So that's your trade. That's it. You're done. If you want, you could wait for New York. New York will normally do something like that and manipulate. Like, if you did buy this here, because obviously we're on the 15 minute, so have an alert on like. So basically, I wait for a liquidity sweep. It doesn't matter what pair I trade. It has to be like liquidity taken, imbalance, um, and you have to follow the narrative really. But yeah, this works on any pair, like literally any pair. Just happens to work a lot more on indices because they're hard. They I don't know why the algorithms seem to work a lot better. Because at the end of the day, it's just all algorithms, isn't it? But yeah, looking at this one here, for example, this is during London. So on the 15 minute, where we are now, you're not gonna you're not gonna be buying up here. You know, we're in an area of supply which manipulated this shit here, and then you know we've come back. Every time we take this out, we distribute. There's a trade there. You know, we come back up, sweep this, mitigate again. Every time, pretty much. Like this one here, look. So you've got this manipulation. This is like the retracement coming back into it. So like watching this imbalance. Price fills this imbalance here, so you could have took a buy here if you really wanted to, because you know we're in a bearish retracement now. we know that they've got to come back, mitigate this distribution here. Sweet, we get a break. So what do? Measure from here to here, 50% or whatever. I mean, stop loss is quite big, it's 23 pips, but it is what it is. If the risk to rewards there, I just don't care anymore. Like, as long as the risk to rewards there, I'll take it. But if you did something like off the 80 maybe, or like 70.5, taps, so you're in. New York. New York Open is here. There's the break. We come back. So first target ultimately is going to be here for a 1 to 3. So yeah, I mean, pretty much it's close. I mean, if I see something like that, I'll probably close out. Like sometimes I don't target the low, sometimes I target just a bit below, because sometimes they will come into something like this and then just go higher. I don't know what it does. Yeah, so I think you'd have been safe. Power hour. Yeah, all of this garbage here, you probably would have just closed. Trade setup time. So from the start to London, 5 hours to get your high, 7 hours for the break, and then come back, mitigate to the low is 9 hours. So 9 hours you waited for a 1 to 2, 1 to 3. If you're doing a challenge and you're risking like 1%, you're up 3% in like 1 day. You could have done the same thing here for the sales, because once price manipulates loads of highs like these, you've got this trend line, huge manipulation during the exact same time again, would you believe? Here's your 1 2 3. Oh, we push up during New York Open, probably some news. What was it? I will just check just because I'm interested. This is the 10th of August. So 10th of August. Oh yeah, CPI. So yeah, CPI 130. So you know, if you're not on the charts during red folder news or just after, just before, then you need to start doing it, because like news is what moves the markets. But yeah, 130 exactly. Boom, big candle. We break lower, break structure. Oh, fill the imbalance. So again, this is what I mean by, like, if you want to increase your risk to reward, like they will go to the imbalance more often than not. So if you want to, you can split your risk. Obviously on the 5 minute you can see, you know, you've got a big wick here. If we go down like on say like the 1 minute, you know, this is like the full body candle. So if we measure from the high to the open of this candle, you know, price doesn't even come back to like the 80 or the 50 or even a 38.2. You know, it just comes back to the imbalance. So that's what I mean. If you did something like this, you could have done it off this one, but you need to kind of cover yourself. You want your stop loss up here, but this one, if you were to put your something like this here, stop loss just above the high, first target would be this low, second target is ultimately going to be here, because there's your Asian lows. Prices manipulated these highs, and it just targets liquidity. Once it's done its job, there, boom, straight up hits it. And it gives another entry as well, just in this one setup. You know, once price has got news, it's manipulated. Even if you miss this one, well, what does it do? You've got, I don't know, this little imbalance here. You would have had this one as well. Once price, just before it takes this low, so you get this imbalance. You could have took one here and shorted to this low. or just to this wick, this one here. Yeah, this imbalance, and you can see the distribution. You can see the orders coming in there. Like, this is clean. This is what you want to see. Like, New York open, 1, 2, 3, and then off we go. It's just like your classic head and shoulders patterns with your W's and your what and your whatever. But ultimately, it's just an algorithm doing its job day in, day out, every single day. Like this one, distribution. It's a type 2 because there's no like manipulations of the highs. So for anyone that doesn't obviously understand Wyckoff, obviously I went really big into it, so obviously I marked all my charts out, but now I kind of don't need to because I understand, like, I mean, it's just basic smart money concepts, but you know, kind of what you're looking for is your trading range. So this is your trading range. Obviously this is like your phase A, which is like you change your character, then you've got like the build of the cause, and then obviously we exit the trading range. Once we exit the trading range here, you can see you get another redistribution here where price consolidates, and then we go again. So these are areas where you want to look for shorts, but you don't want to look for shorts here. You want to look, you know, at the end once you've seen like a manipulation. You can get in, you know, because for example, like this high here, people would probably be selling from this. So we do sweep it, we come lower, and then we come back. So you could have sold this here, and ultimately, if you did hold it, if you held this like this, and then targeted this low, it would have taken ages to come in, but it does come in eventually. And then if you would have held it, there's your 1 to 10. But if you missed that, you can see, you know, this high gets swept during London. So there'd be people potentially selling this, probably including me, would have taken a loss. So unless you did add, again, if you add like a few pips, I wouldn't have been covered there, so like 6 pips. I only had like sort of 2 or 3, so probably a loss there. But you know, I allow up to 1% loss a day or 3 trades. I've never hit 3 losses in a day because, you know, normally after 1 or 2 I'm done. But I do in my trading plan, I allow for 3 losses. So if I took this loss, you know, don't get pissed off about it. Don't just like go and cry in a corner because you took a loss. Just accept that and move on. You know, like wait for another break, wait for price to do it again, and then there's another short. So and then that one works out. If it didn't and you lost again, just that's it. Just walk away. But you know, even for the buys, for example, sweep of these lows. Here's your accumulation during London. You've got Asia. I mean, this one's just textbook, pretty easy to see. But you've got your Asia range. You can see orders being filled. Boom, you go lower. We just break above or leave equal highs or whatever. So you know, liquidity, and then we come back, and then boom, that's it. Just put your entry to measure your fibs. This is your manipulation. There you go, come back to 80%, bang on. So if you did have like an entry off the 80, 10 pip stop loss, which is, you know, a lot better. I'd rather have 10 pip than sort of 20 pip stop loss. But when you're starting off doing this, just try and do like 50%. But you will start seeing that price does come back to the 80 quite a lot. But it just depends. It depends on the scenario, like what you can see. Obviously, you know, I prefer to trade with imbalance nowadays. So for me, like this all looks fairly like balanced. Um, coming out of this. But if you do miss the 80% trade, well then wait for price to accumulate on the lower time frame. Like here's your low, here's your lower low. You can see prices consolidating, right? But then you get this bullish candle, and then what does it do? It leaves imbalance. So if you miss this trade, don't FOMO. Just wait for price to like manipulate, coming back, accumulate, and then there's your imbalance fill. Come straight back in and fill it. So again, this is one of them times when you could do something like this with your stop loss. Just target that high, 1 to 3, 1 to 5, something like that. There's more of an advanced sort of setup, but you know, just wait for price to give you something. Don't like just try and get in all the time. Don't chase it. If it misses you, then leave it alone. Like this one. Price breaks lower. This must have been news. Wednesday, 26th of July. Wednesday, 26th of July. Oh yeah, federal funds rate. So yeah, have a look at the charts when there's red news, because what do you get? A bullish candle that leaves imbalance, that sweeps the lows, comes back and mitigates, makes a new high. So that's your trade setup. You could take the open of this candle, you can take the imbalance, whatever whatever works. But do backtest this. Don't just take my word for it. Like this shit works. It's just whether you can like recover from like taking losses, whether you can accept losses, you know, trading probabilities. Like we don't know which trade's gonna work. We just know that buying up here when you've got like a trading range. If you've got like something like this building, buying up here is just not a good idea. It's low probable. Buying down here is probable. You got a liquidity sweep here. Asia comes back and fills it. Asia doesn't get swept here though. But you do get, if you were looking for buys down here, you get London, and then you get New York equities open. So we don't break, but that doesn't matter. You don't have to wait for breaks, especially like during New York. We come back, we wick straight into it, into here. And then if you miss that, well, there's another break. Here's your imbalance. There's your trade, and there's your 1 to 2, and here's your 1 to 4, whatever. Again, like at the highs, like this is for anyone that doesn't know, this is London in the green. Yeah, same sort of thing. Oh shit, I've lost it. Ah, it's here, it's here. So yeah, you get the highs being swept. You have an unmitigated area from the day before, which leaves imbalance. Does come back, but it doesn't fill completely. But it does the next day. So once you see that, wait for like your change of character. Here's your imbalance. Price comes back and fills it. So you target this low first, and then after the low, it's up to you what you do. I'd advise paying yourself, but some people prefer to wait for better risk to reward. I will always pay myself as soon as price leaves the area, and that's it. Even like during Asia, it gives setups. It doesn't matter. Just choose. Sorry, mate. Was you saying something? Oh, okay, fair enough. But yeah, that's pretty much all I'm really looking for. It's high probable setups. Um, always going, the higher time frame. So if you're like if you need to figure out like whether you're a swing trader, if you're a short-term trader or scalper. I'm more of a scalper to be fair. Um, Actually, I better not delete all them. Yeah, so I kind of I've got three sort of time frames that I look at. Sort of the 1 hour to 4 hour, 15 minute, 5 minute, and then lower. So like my 4 hour is like my long term um, sort of area on my if I'm short term trading or scalping. And then my sort of 1 hour, 4 hour, yeah, so 4 hours is my higher time frame, and then my intermediate is like my 1 hour to 15 minute, and then my entries are like the 5 minute to 1 minute. It depends, if it's the right time, like you look at the candles during the equities opens. So you go back and back test this, but you can see every time equities open, there's always a big candle, like this one, massive candle. You get this sort of, it's kind of like dead. It's still tradable, but equities open, massive candle. Um, this one's a bit shite. You can't really see it on the 15 minute. If you go on the 5 minute, you'll see it. So equities open. You've got quite a few wicks here. Boom, up and down, up and down. Like the volume of the candles is what you want. So like here, here, 2:30 every single day, or obviously 9:30 for the Americans. Um, just yeah, look for these, backtest these, and then see what price does after. Once it sweeps a high, normally it likes to reverse. It'll either do one of two things. It will sweep, um, and then reverse, or it will consolidate and it will continue from like London. So it's gonna do one of them two things basically. And if you can get on the right side of it 50% of the time, then this is going to be highly profitable for you. So, but yeah, I'm going to leave it there, guys, because it's now 8:10. I'll be on next Wednesday. Obviously, there's a few people that couldn't make it tonight, so I've recorded it. I'll post it on my YouTube tonight. If anyone has any questions, just DM me. But yeah, happy trading.